bum, 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 bum. Okay. Switch all that crap off. Good evening, guys. A couple of minutes to the hour. Just setting up to see if there's anybody in. Liam and Kevin, how do you do? And Dan as well. Very warm welcome to you. Can you let me know if you can see and hear me okay? And as if as well, just dripped in. Happy days. And Philip. Well, there's a few dripping in here as well. Hey, Finny, there's a shocker. Kathy. Everything's fine. Happy days, happy days, happy days. Okay. So we'll just sort of see who's drifting in. Peter, PM, welcome to you all. So grab your coffee and we'll have a look. The format for these is pretty simple. I'll start. I've got two questions to answer. One from the resident redneck, Yoxie. Little salute to you. And just before the trolls start kicking in, saying I'm abusing him, we do know each other. The way we speak to each other is a term of endearment. And if you are a soft head that gets offended by everything, jog on and go watch somebody else because it ain't happening here. Okay, and there's Yoxie in. There he is, little fella. Matty with Probert and Sarah. So grand stuff. So we've got a few in. And then the next one is for no. But what I'm going to do is I'm going to start just by clarifying something. Because the last time I did this, I was asked about tax. And somebody started going, no, it's wrong, you're not right, blah, 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 as they normally do. Well, I got my accountant to reach out to the HMRC and find out what the true definition is. And I was right. So from the HMRC, this is their definition of it. If you are trading a CFD, you are automatically taxable, which means you can write off your losses as well as being taxed against your profit. Now, spread betting is slightly different. Now, this is for the UK guys. If you are spread betting, it is tax-free as long as it's under the banner of gambling. However, as this bit sort of alludes to, if it becomes your main source of income, it is now no longer classed as spread betting. It's classed as trading. And then you are taxable. So that's the definition of the way it works. It is very odd the way they do it. It's a very grey area. But essentially what they're trying to do is, if you pay your bills through spread betting, i.e. pay your mortgage, pay your food bills, run your car, it is classed as your main income and they want their cut. But it also means you're able to pay your national insurance, etc. So I hope that sort of makes sense. But cut a long story short, if it's your main income, you're paying tax on it. It's that simple, guys. If it's not, well, then you get away with it. Have another spare job and say that's your income. Okay, so that clears that off. There's quite a few in. Yes, Yox, I saw you. I saw you creep in. And no, he's not a little... Well, he is actually. He's not as big as me, Finny. But there's nobody as small as you. Just thought I'd stick that in while we're talking. Okay. Now, in order to answer Yoxie's question, what he asked was kind of the importance of top-down analysis, multi-time frame analysis. Let me show you something. If you come to market, as many people do, and all they're looking at is a 5-minute chart, what does it really tell you? Can you really get a bias and an understanding of what's happening on that chart? Well, the answer is no, you can't. Even if you dropped on moving averages, they're still so zoomed in, they can't actually tell you what's happening in the big world. You need to look further out. So if you started even out as far as a monthly and you were looking at that chart and you're sort of going, well, what do we think's going on here? Well, it's telling you it's going down. Okay? So if that's in your mind, because obviously a month has a massive amount of data within it, it would tell you it's going down. But where's it going down to? It's looking to clear out order blocks. So that could be why it's coming down. Could also have a fib on there where it's retracing to 50%. However, at that moment in time, this is going down. The 5 minute can't tell you that. If you look at a weekly, it is confirming what's going on. So now you've got 2 time frames, both of them heavily selling. Okay. Look at a daily. It's telling you the same thing. Okay. So what is this in the grand scheme of things? Well, if you look at a monthly, a weekly, and a daily, that gives you what's called the deep trend. In other words, what's going on in the big picture. Doesn't necessarily mean it's happening right now. You know, that's slightly different. What you need there is the mid trend. Okay. So you would now look at your daily and you think, okay, possibly running down. Look at your 4 hour. It's running down. Where can it be running down to? Well, if we just crunch this up slightly, well, there's a big old gap for it to get down to there. So that's still running down. And then you look at down into your hourly, and again, you can see it running down. So before you go to your 5 minute chart, you've already got a short play in mind. And then all you would be doing is looking for shorts. I hope that makes sense in a watered way, because I just wanted to quickly gloss over the top of that. But when it comes to top-down analysis, you break it into 3 sections. So you look for your deep trend, monthly, weekly, daily. What is them doing and what is the confluence within them? You look for the greater trend. That'll give you an idea of the big picture. Look for the mid trend, day 4 hour hourly. That'll tell you what's happening roughly today. Now, if that aligns with the deep trend, you can have a bigger target. If you're going against the deep trend, you're conservative. Then you go hour 15.5 to zoom right in to find your entry. Hope that kind of makes sense a little bit. Because it kind of segues over into, let me just see if I've pronounced that right, because I don't want, I'm sure it's no. He knows who he is anyway, and he's a lovely guy, and I'll give you a little salute, my friend. But his question was about evaluating hourly charts, because he heard me say that if you're in a trade, evaluate it every hour, and then if you're wrong, make a decision. Well, what that means is, if you're in, say, this hourly chart, and you've decided that you are in your trade for whatever reason, and it's going for you, you know, it's coming down, and you think, brilliant. But in the next hour, it screams away. Are you going to hang on to that on a wing and a prayer, or are you going to kill it? That's what I'm driving at with hourly charts. So you make your decision on your hour, and then at the top of each hour, reevaluate it as if it's a fresh trade, brand new, and see if your idea is still in place. If it is not in place, then it's time to sort of go, well, maybe I'm wrong and I should kill this. So that's what I meant by hour to hour. Okay, my friends, let's have a quick look, see who's in the chat, see if there's any questions, because the way it works, you ask a question and I'll try and answer it best I can. What I will say is if the question is just sort of, oh, just show me a strategy, well, you've already lost. Trading is a lot more than strategy. It's a lot more to do with what's up here and how you control your trades. Because believe it or not, all strategies work. Every single one of them, whether it's just a simple moving average cross, whether you're looking at daddy levels from the day before, moving zone to zone like what I do, use an indicator, but you've got to be able to recognize the conditions to use the indicator as well. They all work, guys. They all do. But it's how you control yourself. That's where your money's going to be made. So let's have a look, see where we're up to. So, Yanis is in, Fugly's in, Carl, AW10. Let's have a look. That's the first question. Okay. Thoughts on trading pure action? I actually quite like it. Right, okay, I'll kind of clarify this one for you, AW. You should be trading pure price action because the best indicator on the screen is the price itself. It will tell you whether it's moving up, whether it's moving down. The tails can tell you what the volume is. In other words, if it's a big fat body, there's lots of volume. If you've got a tiny body but a huge tail, that can show you a shift in sentiment. You should be able to read that in the charts. Then the indicators, they just help guide a decision you're already making. One of the problems with trading in general is too much emphasis on indicators. Indicators are great, but they're exactly what they say they are. They're an indication of what might happen. The price and levels are king, and they always will be. So let's have a look, see where we're at. Jan, hello, David, Jeremy. Fugly, where can you find the right broker to start trading, paper trading? YouTube almost are just promoting brokers. Well, there's 101 places. Most brokers will give you a paper trading account, which you can use. TradingView give you a paper view, and it's quite a decent platform. I don't particularly use it myself, simply because I don't particularly like it. But every broker will give you some form of a paper trading. And then when it comes down to what's the right broker, again, it comes down to what you're after. Personally, if you're after, say, an MT5 platform to align yourself with, say, a prop fund, for me, I've never had any issues with Black Bull, and the spreads are pretty good, cost next to nothing to get into it, and it's one of the few that'll give you leverage. However, what I will say about leverage is that's just buying power to open the asset rather than increase your lot size. You should always have your lot size based on the size of your account. And I work to a simple formula, 50p for every 500 or £1 1,000. And then it just controls what I'm doing. Is there some good bad brokers? Yeah, there is. And you'll often find them with sort of, well, let's just say they're not accredited in known places. They're kind of in the Bahamas somewhere. I'd be looking for something that's in a major city. So you want sort of London as your broker where the license is, or at least have at least one of the licenses in London, because then it's covered by the FSA and then you'll be secure. So let's have a look, Keith. Right, I'll show you what a daddy levels are, Keith. Makes sense. Daddy levels are literally what you just said, the high, low, open, close. However, there are 5 daddy levels. Now, a daddy level has just got its nickname because the daily is classed as the parent, the daddy. The weekly is the granddaddy, and then you've got your great granddaddy, which is the monthly. I know it's male oriented, you're not supposed to say that in this modern world, but I'm an old dinosaur. It's daddy levels. It always has been daddy levels from when I started, so it's staying that way. What they are, if you are looking at your daily, and we just flick this across, you will look at the previous day. All right. So in this case, it would be there. So that's the lowest that that chart has been to. You then want the close of the chart, the open of the chart, and the high point of the chart. However, there is a fifth level. Now, you'll often see me have this as a dotted line, and it is the midpoint. Now, an easy way to do that is just grab a fib, pull it on, and use the 50% halfway through, just like so. There we go. So that sets your stall up for the day, the next day. So in this case, it would set its stall up for this. And then if you drop this down into your hourlies, you can start seeing how the price reacts to it. Take it even further into the 5 minute. And you've got nice zones and areas of attraction to work to. But you've also got this, which acts as a pivot. And if the price is holding below that, and you've already established that it's in a downward trend, well, is it not fair to assume it's going to try and revisit the bottoms, because it's eventually going to try and break through to continue its journey down? So these levels, even if you don't put anything else on, are quite important. You know, they're very significant to the chart. So happy days, happy days. So where else are we up to? Do you think the DEX will reach the bottom of last week's data? No idea. I take it on day by day, and that's it, because I day trade. I don't really worry myself on sort of trying to predict what's going on. I'm more a reactional trader. But if I was looking for a continuation and all of that sort of thing, I'd be looking at higher time frames, and I want to see certain breaks of structure. So let's have a look. What is your tech system platform? How do you connect that to you? It's MT5, Carl. It is what I use. It's the chart of choice for the 5%ers, and it's all done for you. They give you a link. There is links for the 5%ers down in the description. You get 5% off if that's what you're after, and it's all done for you. It's very, very simple. Okay, Tom, what are my thoughts on journaling? Right, well, there's a question and a half. You should do it, most definitely. Now, the problem with most journals is people like to basically put in the wind. They want to see it high. They want to see it constantly moving forward and going, yeah, that's the way forward, you know. But then when you lose, you don't want to do it no more. You're sort of, I'm sick of this. This ain't very good, you know. But what's actually happening at that point is you're missing why you're journaling in the first place, because your journaling is really to highlight where you're going wrong. And if you can highlight where you're going wrong, then you can build a better platform for your trading. Now, when I put my journal together, I'm not really bothered about the wins. You know, I'll just put a bolly break or level bounce, good day. If I get it wrong, then that's why I record my trades, because I can play it back in real time and see, was I over anxious getting in the trade? Did I have an itchy trigger finger? Did I put a trade on that shouldn't really have been there? All these different things. But then I start looking at my mood. You know, why did I do it in the first place? Was I in a good mood? Was I in a good frame of mind? And often what I found was, when I've made mistakes, it's because either, well, made one the other week because I wasn't very well. But I'm normally angry, or I'm sort of annoyed at something, and I'm not really thinking straight. And then I make a mistake. So your mood has a big factor on what your trading is. But you won't remember that in, say, 3 months' time when you're looking back at your chart. You think, oh, why'd I lose 500 quid there? But if you wrote down that you were angry for whatever reason, just got out of bed the wrong side, stubbed your toe on the door or something, and then you just took it out on the markets, you'd start understanding that you have to have a calm peace of mind when you're trading. So for me, journaling is a big thing. It really is. Okay, Lee, let's have a look. What's your markup on the DAX today? Highs, lows, etc. You're marking various colours. 100. No, what I mark the colours for? Red is monthly, yellow is weekly, and black is for my daily. If you're seeing it on MT5, it's purple because for some reason I like white on my web trader and I like black on my MT5. All the colours are for, because I do move them about a bit as I'm sort of pulling my levels in to tighten up, is if I make a mistake and I move one, I know where I drew it from and I can quickly flick back and then piece it back together. So that's all the colours are for. And you'll often see that I have solid and dotted lined. The solid are clear turning points. The dotted lines are fib. In other words, hypothetical points. They haven't been tested, but there's a high probability for them. Hello, Ivan. How are you doing, my kid? I haven't spoken to you for ages. So let's have a look. Pull up a picture. You think we will reach 50% of Friday's move? Highly possible, but we'll find out. At the moment, there's a big downtrend within cable. We'll find out tonight whether there's any movement. But any significant move like that, there will be some form of a retracement. The question is when. Whether it's today, tomorrow, or at the end of the week, we don't know. But at the moment, it's showing signs to the downside. Although, if I flick this over for you, and I just show you something, you can see all of these candles are getting smaller and smaller. So the volume was running out, and it genuinely is running out. So there could be a good opportunity for a retracement. Now the question is where's that retracement going to go to, and how high can it get to? Now at the moment, if we're looking at this and we start putting fibs into the equation, we already know what this is. Okay, so if I do that backwards, just so I don't have to put an extension on, pull that up, it's already touched the 161 and it's holding underneath it. So its next logical place is here. So I'll be paying very close attention when it gets there. But if it does come all the way back to this 100%, there's a high probability it's going to come and touch this 50. But it's like everything else. We don't know. We haven't got crystal balls. But the deep trend is to the downside. So I want to see how far that's going to move into it. Now let's have a little look at this slightly. So as we can see, this is still dropping down like a falling knife. And you never try and catch a falling knife. If I just put on a basic indicator, just kind of get rid of that. And where's my bolly? Just put the defaults into that. Excuse me a second, just reset this. Okay, if you look at this Bollinger Band here, it is starting to collapse at the top. Now that'll show you that whatever strength in the market is starting to run out. But if you look at this, this is screaming down, almost straight down. So that's telling you there's still a decent amount in it. You don't really want to be looking to go the other way until this starts curling round. And that can easily slam down into here. And that's exactly where that bolly is. So the Bollinger Band is quite important. Because what it shows you is, not only is it showing you a decent moving average, which is this, because it's the 20, it's also showing you where the stretch is. Well, the stretch is here, and that lines up with that. Now, if we take this out to the daily so we can have a look at it, okay, it's starting to flare. And when we see a market flare, that shows us a lot of pressure in it as well. So for me, it's still to the downside at this moment in time. But it's like everything else. As soon as the opens happen tomorrow, reevaluate it. I wouldn't advise trying to trade this in the open tomorrow, because it'll be wild. Let it do its thing and then look after it. Okay. So let's have a look. You're right here, there it is. Because we need a coffee. We all know Scruffy likes a coffee. So let's have a look, see where we are. Keith, would you always mark your fib on an hour chart if trading 5 minutes? And maybe, well, for a fib to work fully, you don't really want to be below the 15 minute. Ideally, you want to be looking on an hour. Let's just, did you have a market in mind for this, Keith? Or was it just general chat? Because we can show you a couple of things. Let's just get all this off and sort of highlight something for you. Because if you're looking at, say, an hourly chart, like this, all right, you can see there's a solid move here. And you'll identify a top, you'll identify a bottom, okay? Now, this is just coming into breaking that now, so it was still relatively valid. What this does, you start it there to the top and then pull it through. What it shows you on the return are perfect stall points. So your 23, as you can see, it stalled there. It broke through, stopped dead on the 38, came down, stopped dead on the 50, came down, stopped dead on the 61. It stopped dead on the 76. So if that's bursting through, well, its next point of call is here. So if I just drop in some quick levels for you. Now, without even sort of going hell for leather with the charts, this is an hourly chart. Drop this down into 15 minutes. Isn't that nice zones to work to? Very, very simple. From there to there. If it breaks back above, we've got it up here. And then you can sort of take the principle of midpoint again. And if you have a line through the center, again, it can give you a good target point. Fibs are wonderful. They can show you so much all the time. I use them every single day. So happy days, happy days. So let's have a look. Yanis, let's get those likes. Yeah. The more likes you do, the more I'll do this. I'll try and do it every Sunday. Likewise with the super chats. It all goes to a good cause, and it's the only reason I'm doing this. If it ends up just being free every week and St. Cuthbert's getting nothing, I spent 6 figures on my education. That's kind of why I do this. Try and give something back a little bit. So where are we at? Ian, Lee, yep. Andrew, been a while. It has. Thank you, Pull Up. And let's have a look in general. So I hope that kind of answers your question. I genuinely do. What's your previous answer? Do you use COT? Not in the slightest. I'm going to kind of touch on that a second. You can sometimes read way too much into this. If you're looking to swing trade, then looking at the economics of the way an economy is performing or a currency is valid, because you need to know whether there's any storms on the horizon from that. If you're day trading, it's a complete waste of time, absolute waste of time, because whenever there's any news announcement, any sort of reports coming out, do you really think it's going to affect the next 15 minutes? No, it's looking at months and years and one thing and another. So sometimes you can bog yourself down way too much. And it sounds great when you're talking about it, but when it comes to the charts, it means absolutely sod all. The only thing that's important is your level and your price. That's it, you know, because it's intraday. And you can have two traders, both of them looking at the chart at the same time. One wants to go long, the other one wants to go short. And they're both right. And I've proved it. You know, I've done it so many times where I've been a contrarian trader and I've gone against the trend because the guys in the group have asked me to. You trade what you see, not what you think when you're day trading. When you swing trading, you have to go with the prevailing trend and take as much information as you can. So sometimes you can be, how do I put it? You can kind of look for the needle in the haystack, but it's swamped with so much information you'll never see it. Whereas if you just look at the price, that sort of case in point on that euro dollar, you can say to yourself, well, it's broke a level, it's going down, so until that chart tells you otherwise, this thing's going down, and it's got nothing in its path. So that's it. Keep it as simple as possible, Tom. Simple as possible. And you'll probably find that this does a whole lot better. Okay. Charlie, 20 likes. That's very kind of you. Sarah, what do you think of pivot indicators and what they show? Pivots, let me just kind of clear this down and show you something with pivots. I actually quite like a pivot. Because I use fibs a lot, I don't necessarily need to have a pivot on because I'm looking at daily levels and weekly levels, etc. And if you're talking of levels, if you have a monthly, weekly, daily level on your chart, that's all you need. You don't really need to go on to 4-hour, hourly, all of that, because those levels will ripple through the time periods. And what you've got to remember is the big money is only looking at high time frames. They're not looking at small time frames. So the levels that the price is going to react against are normally the higher ones. Now, when it comes to a pivot, they can show the way. So if we just flick a pivot on, and this is a standard pivot, what you'll find, let's just flick this out to the hourly just so I can easily see this. We'll find midnight. Where was midnight? Here. So that candle was midnight. If the price opens below the pivot, it has a good chance to try and find S1. If the price opens above the pivot, it'll move up to R1. So these again can help define what you're looking for. Now, if you've already got a bias in place and you've seen that, you've seen your deep trend, seen your mid trend, you drop your pivots on and you don't want to go to hell for leather with indicators, etc. This is a good way to go. You can go, okay, well, it's holding below. That can be a target point. And how can you do that? Well, if that's my 12 o'clock. You can just sit and wait. You can have pending orders underneath. That would have got you tagged in. You have your stop on the other side of the pivot. Okay, you sat in a little bit of heat. But that heat was through the night. There's the open flush. Touch the pivot, straight back down. You plot them time and time and see how often that works. And you'll be surprised. It's a good, easy way to target. Okay, very, very simple. So where else are we at? So here, my first time in your live stream, and appreciate your knowledge. You're very welcome. You're very, very welcome. The idea of these streams was a lot of the time when you see my videos, it's always in the moment, you know, and they don't get it because they think, oh, it's too fast because it's speedy, speedy, speedy. And I thought, well, I do a Zoom call face to face every morning with the guys in the squad, and it's all shared learning. And then I thought, well, oh, okay, a good way to give that little bit back was to do this on a Sunday night. So that's what that was for. And you're very welcome, Tom. You're very welcome. So you tell me, guys. I mean, this is all for you. Trading ain't hard. At the end of the day, if you think about it this way, what is trading? And this is why I sometimes say it's not about the strategy. You can actually get in on the flick of a coin if you choose. It's how you manage the trade thereafter. Because it's always going to be retracement, so there's opportunities to get out. It's really, how do I put this simplistically? Well, think about it this way. A chart can do three things. It goes up, goes down, it goes nowhere. You should be able to recognize nowhere quite easily because it isn't doing anything. So the chart is really two options, up or down. Well, if you're caught between 2 points, 2 levels that you've put in correctly, you've got a 50% system. All you have to do is get your direction right. And the direction can be something as simple as, well, it's holding below a pivot, so I'm going low. Or it's holding below a 20 daily moving average, so I'm going low. That's as simple as trading can be. Where it becomes hard is where you're trying to get every wave, put too much money into it, and try and get too much money out of it. Because ultimately, what you're doing is putting yourself front the freight train. Because eventually, that train's going to hit you. That's what makes trading difficult. But you're also probably looking too far down the chart. I've done it myself. When I first started and I was in industry, I never looked at anything lower than a daily chart. Everything was done on sort of weekly and daily charts. And then I had the light bulb moment that, well, if I use a 5-minute chart, I'll make a fortune, eh? Sadly, that weren't the case because often I was going against what the deep trend was or the day trend, and it might go in my favor 2 or 3 pips, and then it would just rattle off and just knock me out. And the other reason it knocked me out is because I couldn't control the stops. I had the stops too tight. Now, you need at least 2 barriers between the price and the stop. Now, that can be a moving average and a solid level, or it can be, say, a fib level and a solid level, outer edge of a Bollinger Band, but something that is a resistance point that when the price comes to it, it's going to react, and you want 2 of them. But you get taught, oh no, you have a super tight stop and you'll be rich. Well, if you're trading the DAX with 10 pips, good luck with that one, because it'll do 30 in a heartbeat. And the chances of timing the top and the bottom is very, very slim. That's why I say work to a rule of 3. Don't want the bottom third, don't want the top third, I want the bit in the middle, because it's safe. And because it's safe, it keeps me consistent. And that's it, really. So happy days. Now, you'd be very welcome. Pull up. What a great name. Pull up a picture. I would say pull up a chair and have a pint. How's that? But yeah, appreciate every view. And for everybody here that hasn't come across the Conscious Day Trader yet, do check Yanis out, the boy wonder. I hate him. I genuinely do. He's good looking, lives in the sun, fit as a fiddle. I hate you. I hate you. I genuinely hate you. Nah, I love him to bits. It's brilliant. Check out the Conscious Day Trader and do give him some support, because he's done great guns. He genuinely has. So happy days, happy days. So let's have a look at Fugly. What's this one? You use your journey for keeping sight of your trade. Well, I have it all on a spreadsheet, and all you need is the asset you're trading, how much you traded, how many pips you got, and sort of how much you'd either dented or gained on the account. So that's some good information. So that tells you whether you're moving in the right direction. Then have another part, which is your mood. And then you can have on whether it's long or short, which strategy you're using at the time. Because you might find that you know 2 or 3 strategies, but only one of them is really profitable and the other 2 not so much. And then a few notes. Very, very simple. If you go through my videos and type in journal, you'll see exactly how I got mine. And that's all you need. Very, very simple way to do it. Some people like a pen and paper. You know, just literally just write down what they were doing, like a diary, and then take a screenshot of the trade they took, put it in the folder, and then you can check it at a later date. Oh, Vinny, how we doing, my little fella? It certainly is. The mental game is so much easier the lower the lot size and relax. What I'll say on that is, when you're going into market, the number one question you ask yourself, the number one, is, can I afford this trade? So you should actually know before you press the button where your stop is. I'll kind of give you an illustration, just a quick market. There is an indicator, all right, just there. Get rid of that for now, and we're just going to use this as an argument, right? And you're getting in break. Is that the 12 o'clock? That's 1 o'clock. Yeah, break of that candle. So if you had a pending order, for argument's sake, and it got trigged in, you need to know how much that trade is going to cost. So the first thing you want to be doing is getting out a measuring tool, just like so, and go, well, I know I'm getting in roughly here, but I'm definitely getting out, say 5 pips, 6 pips above that. So that will be, say, 60 pips stop, right? This is all hypothetical, guys. I'm just using it as an example. So you know, whatever happens, that's where I'm wrong. I am absolutely wrong. The machine is going to take this out, okay? And it's 60 pips away from where I'm entering. Why 60 pips? Well, because I know I'm entering here, which is the break of this candle, the 12 o'clock candle, and I need it to be hidden behind a swing point and some form of resistance. Well, there's the swing point and there's the resistance, which is the pivot. So that's like 2 barriers, if you like. And you want the stop on the other side of it so that it can't clip a wick, okay? Because there's a tiny wick that would have knocked you out if you put it dead on there. So you know it costs 60 pips. Obviously, the higher up you go, the less it costs. But that's where the stop is. So if you've got a very small account and you're trying to trade £2 a point, you're going to look at that and say, well, I've only got a 500 quid account. And if I get clipped, that's £120. So the first question you ask yourself is, am I willing to pay £120 for this trade? Well, common sense is going to tell you no, because it's too big. So half your position size and ask yourself the same question. Am I going to pay £60 for this at £1 a point? Well, no, I still think that's a bit high against the account. Half it again. Will I pay £30 for this at 50p? Maybe. Still a bit rough. And you keep asking that till you say, yes, I will pay this. And if you say, yes, you will pay this, then what you've done is you've emotionally set yourself ready for the trade. In other words, you're at peace with it. If you go wrong and it costs you £30, you've already agreed to pay it. And then, if you're wrong, it's a paid lesson in not what to do. But if you just looked at the money and thought, well, I'm on £2 a point. If it goes for me, I'm going to make a fortune. Well, yes, you could be. However, we don't work that way. We always work defensive. So you always think about what you're going to lose, not what you're going to gain. And if you think that way, it won't half calm you down. And if you're at peace with the trade before you press the button, you won't make stupid mistakes. Because the one mistake that happens all the time is, and tell me in the comments, do admit to it, because I've done it myself. I don't do it anymore, but I do talk it. When the price comes up to here, you move the stop. You go, it'll be all right. It'll be fine. Well, yeah, you might get away with it once. You might get away with it twice. But the day you don't get away with it is the day it hurts you badly. So I hope that one hits home, because that's very, very important. You know, always ask that question. How much will this cost? Even if it's a roundabout figure, you should always know where the stop's going to be. And your entry point is kind of roughly, you know, there or thereabouts. If it moves any higher up, brilliant, it's cheaper. You know, happy days. But ask that question. Okay, so Fugly, you talk about pips a lot. Do you trade the same pips on Forex? Well, I'll be honest, I don't really trade crypto. I tried it and I just genuinely didn't like it. I found it like the Wild West. I couldn't really get my head around it. So it's like most things, you trade what you know. I'm pretty good with Forex indices and commodities. And if I start piling onto the top of it, it just dilutes my focus. You can trade one asset, just one, say cable. To be honest, if I could only trade one asset, it'd probably be cable. Why? Because it will trade me every day. It will give me a trade every day that I can recognize and I can manage. Whereas with the crypto world, it was just sort of all over the place. But when it comes to pips, yeah, I do talk about pips, but call them ticks, points, whatever. It's just a price movement. And I have like a minimum sort of ratio that I work to, which is 10 pips. That's the minimum trade I'm willing to take. So from there, get whatever I can. So let's have a look. Pull up a picture. Overtrade, two big lots at? Definitely. Overtrading is an absolute killer. I trade once, twice a day, and I'll be very patient. I can wait from 6 in the morning till 1 o'clock in the afternoon for that one trade. but I'd rather have one good solid trade and know that I've followed everything that I need to do. In other words, my levels are in place. My RSI is not overstretched in any way. It's inside the Bollinger Band, so again, it's not overstretched in any way, and I can see what's going on unless I'm doing reversals, and then obviously it's the other way. I'm looking for the stretch points, but if I'm going with the flow, I want to see that, and I've just planned it out, and then I'm happy. I'd rather have that than try and scalp this 5-minute chart, that 5-minute chart. Oh, that looks a good chart. I'm going to jump for that. I zone all of the assets down to one, and then I zone that asset into one trade, and then I go for it, and as soon as I'm paid, I'm out. And that's it. And that keeps me consistent. You know, at the minute I'm running at 92%, and you see that in my statements that I show you. But my edge is I don't overtrade. Once I'm done, I'm done. That's it. So, yeah, stop loss theory. It's stops is a hard one here because I don't mind a wide stop. I think there's a difference between a tight stop, which will give you death by 1,000 cuts, and then you can have a haymaker stop where it's so wide if it hits you, it's going to hurt you so badly. That's why I asked the question, how much will this cost? You know, and then once I'm happy with the cost, well, if it's 50 ticks, fine. If it's 100 ticks, fine. As long as I'm happy with the cost. And then the profit is just what I get off the other side. Okay. And as if we've all done it. Vinny, it's nothing to be ashamed of because we've all done it. And you have to learn through your mistakes. But that's just trading, isn't it? It's what we do. Andrew as well. Drunk trading is a bad move as well. Well, I think me and Finney might be in that somewhere because we have been known to have a drink from time to time. It's not a good thing. It's not a good thing playing with a keyboard when you've got a beer in your hand. It's all right with the first one, but when you get up to about 7 or 8, then it gets a bit dicey. So happy days, happy days. RP, staying in the game and don't blow your account. Correct. To stay in the game is very difficult because actually, I'll tell you something, and some people might disagree, but I've seen more traders go wrong when they're doing well than I have when they fail. Because what happens is you get the invincible syndrome. You win, so I'm brilliant. You win again. Fantastic. This is working. 3, 4, 5, 6, 7 times. This is outstanding. I cannot lose. Well, when that happens, your ego starts taking over and you literally bet the farm on the next trade. You whack up your position size and you also think the trade will work just simply because you're invincible. And then the market turns around and shows you how invincible you really are and swats you like a fly. Crack. Humbles you very, very quickly. So staying under the radar's my recommendation. Do that all the time. Well, here's a little trick for you guys. Well, I'm saying a little trick for you guys. I mentioned this to Finney once, and he might hold out to this one. Every time you do something wrong, whether you lose the trade through overtrading or you move your stop when you know you shouldn't, give your other half 20 quid and see how many times you do it thereafter. I think Vinny was up to about 1,000 quid. But that's a good trick. Have a consequence to your action. You know, I'm moving my stop, right? I'm having to pay 20 quid for that. Whether it works for you or not, you pay 20 quid. If you lose because you have an itchy trigger finger and you're wanting to be in the charts all the time, pay 20 quid to your other half. And I'm pretty sure she will be. I'm pretty sure she will be. And have a consequence to your action. And it kind of segues back to the beginning of this. When one of the guys was asking about sort of paper trading and prop trading. Paper trading is good for you to backtest and nail down certain aspects of your trading plan. So I've got my levels in place. When I see a break of the level, I want to see the RSI stretching down, or I want to be in line with a deep trend, whatever it is you're looking at. It's very good for mapping that out. But what it's not very good with is the emotional side of it. That's where you need something at stake. And for the 5%ers, they have, I can't remember how much it is. I think it's 95 euros. It's not a lot of money, let's put it that way. The boot camp, as one of the guys has just put up. Tom's just passed it. So absolute salute to you, my friend. It's not a lot of money, but you have a consequence to your trade and you can see it. So for a very small fee, that will teach you how to trade, because when you've got something at stake, even if it's only a small amount of money, it doesn't half change the way you look at the charts. It genuinely does. So I do recommend that. And it's kind of why I like prop to a degree. Well, I'm going to rephrase that. I don't like prop. I like the 5%ers because they let you do what you like, when you like, and how you like. They have kind of strict drawdown rules which keep you in check. But because they allow you to trade across weekends, overnights, news, etc., you kind of have freedom. Where there's a lot of other ones out there are the time limited, where you've got to pass 10% in 30 days. No, not a chance. It's forcing you to gamble, and I don't like that. So you've got to be a bit careful with it as well. You can even do your own prop fund. Put a little bit of money into an account, double it, or add 20% to it, whatever your little target is, over say a 6-month period. And then once you've done that, fund a little bit more into it. Earn the right to trade, shall we say. That's how I did mine. I just did it little by little. So there we go. Just did that. On the 5, what percentage of total would you risk per trade? Well, again, every trade is different, as if. I work in money. So if I've got 400 quid on the table, I would only be looking at a maximum of 40 quid, which is 10%. However, it's not quite 10% because I break up my trades. So that would be broken by 5. Now, I might only trigger 3 of the trades, which reduces the exposure. And not only does it reduce the exposure, it increases the upside as well. So I don't really work in percentages. I work in money, because if I can see it as money, then it becomes real. Whereas a percentage, it could be anything. Just doesn't really mean anything to me. But that's because I come from an industry background where we do deal in money. And happy days. Andy saw this and popped in. Well, very welcome. Always welcome. My wife's listening. She likes the idea of 20 quid. You're welcome. I'll be getting a Christmas card offer at the end of the year. Well, let's put it this way. Joanne got kitted out with brand new set of clothes, and you all know how she likes to spend. Sharp knocked that one on the head. She's being greedy, Ivan. She sure has. So to be part of the Scruffy Squad, suddenly need a diamond screwing. Do you expect to get in return in that option? Well, it's not really a sales pitch. What I'll say is drop in the Telegram and ask the guys. But the way I set up the squad was, one, to give something back, and also sort of help me support something that's dear to my heart. So you've got bronze, silver, gold, which is basically you get into your Discord, you get my sheets. I'll work out the strengths for you on a morning, all that sort of thing, and you can have a bit chat and one thing and another, and that helps support. Then the other side of it is the learning side of it, and you've got Diamond and Rogue. Diamond is based mainly for swing trading, and Rogue is for day trading and swing trading. And then I was asked if I would put together a course and give a little bit extra, and that's where Rogue Plus came from, because once you've been in 6 months, you get free mentorship from me in the form of a free one-to-one, get discounts off your one-to-one, there's a course, you've got the Zoom replays every day as well as the Zoom calls, all of this together. And the way the pricing was worked out was very simple. If I sold that course, I could easily charge 1,500, 2,000 quid for it, easily. So I thought, well, how much would 5 years worth of membership be? Well, it's nowhere near that. And that's where the price came from. So you could be in that group for 5 years and you still wouldn't pay what you would for a single course. And you might come in, see what you like in a month, and that's all you need. Well, you've spent 44 quid or whatever it is, and you've had a full course, you've got your brain cells firing, and away you go to better. Or you just stay. That's kind of the way I did it. I thought it was the fairest way. And for those who complain about it, I'm not bothered whether you come in or not. In fact, I could shut the whole thing down tomorrow and it wouldn't bother me in the slightest. I do it because I found some wonderful guys and we've built a wonderful community, and that's what keeps me going. Okay, so let's have a look, see where we're up to. I think she would give me 40 quid every time you win a trade. Well, that's not a bad deal. Don't think Winky would though. Trust me, as soon as she gets money in her grubby little hand, that's it. It never gets to see the light of day again. Well, not in my hand anyway. So let's have a look. And the last one from Andy. You mentioned RSI. What levels do you use for going bullish and bearish? Well, I change mine slightly, Andy. Let me show you how I like to use it. The RSI is it's a great indicator. Now, when it's in this setting, it's a little bit too slow for me. So what I have a tendency to do, because I like to work on what I call put my teeth back in, a momentum ignition. In other words, it comes to a level and there's going to be an ignition, some kind of spark that'll fire the price. Okay, that's too slow for me. But if I speed it up to a 5, but then push the boundaries out slightly, well, then it changes the dynamic of what it does. So if I'm at said level, it'll show me there's a turn coming. There it is there. So it's coming up to the level and it's shown there. Thump, down it comes. Even here, when it went oversold, it went back up for 2 hours. Likewise here. Now this is where the RSI falls down and you can't use it on its own. You need other parameters in place, whether that be a level, whether it can be the outer of a Bollinger Band, a fib, whatever it is, a structure point that you can recognize. You can see it there. Soon as that starts coming back over into this on a stretched out RSI, there it is there, thump, down it comes. So the RSI is brilliant, but I use it for momentum rather than strength. So I hope that helps. And what I'm using is the extremes, because once it gets up there, it has to release the pressure, and away we go. Okay, so where we're up to. Very welcome, Smets. Wages, capital drawdown percentage do you draw down in order to build up an account? Right. Okay. Now, wages, I have my account built up to a level that can pay me pretty much every day without really denting my capital. But what I would suggest you do as you are building up, what I'm doing with that small shares account, I'll build it up, and then every quarter I'll take a little bit of money out. Now, it might be 10%, okay? And I'll just take 10% of the profit out, give myself a treat, let it go. But the way it works for my wages at the moment is I work on a 50-50 sort of situation. Say I make 10 grand, just for easy figures. 5 of it is mine, and I'll give the other 5 into a bank account that belongs to my trading account, because I have a slush fund account, because I only hold in my broker what I need to open up my trades. And what that does is it means I've always got money to fall back on, but it's gaining interest in the bank account as well. And it means if I go into a situation where I'm in heavy drawdown, I haven't had it for a while, but there's going to be a time when I just get belt, I get belt. That money that I've put into that bank account will offset my wages. So I'm always paid every month. Okay. Happy days. So where are we at? Press like, Eric. Yeah. Be very kind if you could. Just my job, fugly. That's it. Do I drive a Lamborghini? No. Do I aspire to drive one? No. Do I drive a nice car? I do, but it's second hand. It's just my job. Treat it as a job. It'll pay you as a job. Don't worry, Stephen. You are a bit late. There will be replays for you because we're about to wind this up. And let's have a look. Do you work your own strengths? I do. I prefer, easy way to do it. If you are unfamiliar, if you come onto this website, which is called FinViz, go onto Forex, it'll tell you what the strengths are. Okay, so obviously New Zealand's incredibly weak. US is pretty good. Okay, and that'll give you a quick snapshot to work out some pairs, and what you're looking at is extremes. So if US versus that one, that will help you. Now, personally, I prefer to do it myself because it's just something that I've done for a long time. Okay, so where else are we at? So very kind of you, Ian, genuinely. No, I hold an account with the 5%ers, which is also mirrored to Black Bull. And I have IG. IG is my wage account. I've been with them since year dot, which is why I use them. And Black Bull came in as a secondary sort of broker just as COVID was hitting, simply because IG kept crashing and I needed a backup broker. And as a friend of mine uses Black Bull, so I use Black Bull as well. But I use that for more swing trades, that sort of thing. And my prop, which is the 5%ers, is MT5. So it's very easy to mirror between the two. Very, very simple. Cheers for that, guys. Grand Rover is better than a Lambo anyway. You are right. Yes, I do have a Range Rover and I love the thing. And I'm looking at getting another one this year. I like it that much. So happy days, happy days. I'm completely new to trading. I put $200 and I want investors. Do you have anything? Well, right, okay. That's a difficult one to answer, Daniel, because we shouldn't really be giving investment advice. But it depends on what you want to do. If you want to trade it yourself, I would probably be using my £200 in a prop, because then you'll get better funding for your money. Takes a long time to build $200 up. However, if you just want to see it grow and self-manage it, use something like a self-managed ISA. Personally, I use Scottish Friendly. I know a lot of people use Vanguard. and you can pick out your certain fund criteria. That might work for you. Right. How do you make it go red and green when it's outside the RS? Let me show you. I'm assuming you mean this. You click on there, you just click the side and you can change it any color you want. So that's the line and that's the fill. There you go. And I just prefer green and green. Very, very simple. Okay. Yes, Charlie. Where are we at? How many strategies do you use regularly? Well, there's three. Well, I know lots of strategies, to be honest. I know loads of them. But the ones I use mainly, I use GoldenEye every single day, which is a zone-to-zone strategy. I use the River for my long-term. If you're watching the shares progress, it's currently 42% up since December. So that's not too bad. That's all on the River. If I scalp, I use a system called the Push. But do I recommend scalping? No, not at all. I prefer day trading, where it's a single trade and you manage it. Okay. Don't use TradingView, so I can't really comment on that too much. It's very, very simple. It is pound per bid or pound per point, but basically it's 0.01 equals 10p. One lot is a tenner, so it's very easy to work it out in your head. Do you use multiple fibs weekly? I do. I put my levels in. I look for key fibs on monthly, weekly, daily. I'll then drill that down into an hourly chart, and I'll put a fib on for the hour so it can give me good entry exits, and then I work from there. But the hourly is changed every day. The daily, weekly, monthly, once they're in place, they're in for the week. Okay, so there we go, guys. Ran over a little bit, but not to worry. I hope this has helped. I genuinely do. Do sort of use super thanks and super chat, etc., to keep these things running. If you want any of the links to contact me, etc., you should find them down in the description somewhere, and there's decent links to sort of other things. Give you some freebies in there, you know, and recommended books, that sort of thing. So there we go. Happy days, happy days. Pleased about that, Jeremy. So there we go. So I'm going to enjoy my coffee, which is quite rightly gone cold. And do it all again next week. Do check the channel out, share it to your friends, all of that, because it'd be lovely to see it move forward. And if you haven't already, do check out the Conscious Day Trader as well, and make certain that you give him some support. So as always, guys, trade well, keep your risk managed, but above all, do what you love, and the money will follow. See you all in the next one.